Don't wait until you're ready to move to start preparing financially to buy a home. If you're like the vast majority of buyers, you'll finance your purchase with a mortgage loan. And by preparing a little bit in advance, you can avoid the common delays and roadblocks many buyers face. The steps involved to secure a mortgage can seem overwhelming, especially if you're a first-time buyer. But by following these 3 simple steps, it'll set you on your path to homeownership. It's never too soon to start preparing to buy a home, and by following these 3 simple steps, you'll begin laying the foundation towards your future home purchase today. Even if you're a current homeowner, it's a good idea to prepare in advance so you don't encounter any surprises along the way. Lending requirements have become more rigorous in recent years, especially now because of the virus. And changes to your credit history, job type, debt levels, and other factors can influence your chances of approval. Step number 1. Check your credit score. Your credit is one of the first things that a lender will check to see if you qualify for a loan. So it's a great idea to review your credit score and report before you're ready to apply for a mortgage. And if your score is low, you'll need time to raise it. And errors or fraudulent activity on your report could take months to fix. So how do you know if you have any errors on your credit report? Well, federal law says that every 12 months we all get a free copy of our credit report from all 3 credit bureaus, so Equifax, TransUnion, and Experian. And the way to get that is to go to annualcreditreport.com, and you can request it for free from all 3 bureaus. So this will just show you if you have any errors, accounts past due, things you don't know about. It's good to know what's on your credit report, but it's not going to tell you your score. The best way to get a sense of that is if you already have a credit card. Most of the credit card companies are offering your free FICO score every month, so check the website where you go to pay your bill, and there ought to be a link that says, check your FICO score, free FICO score. It's not going to be the same number that a mortgage lender sees, but it'll give you a sense on if you're like in a super comfortable place, or if you're really close and need to be careful, or if you're way off. So that's the best place to start. You can also use one of the free apps like Credit Karma. That's okay too. But again, these aren't 100% accurate. Your mortgage lenders are going to see something a little bit different. So it's just to kind of be a guide. So the score most lenders are going to use when determining your credit worthiness to get a mortgage is called the FICO score. It stands for Fair Isaac Corporation. It's the group that invented this kind of score, and it's weighted based on 5 different criteria. So the first and most important one is your payment history. So need to make payments on time. The amount that you owe, the length of your total credit history, any new credit that you have, and the mix of credit or different types of credit accounts. So scores range between 300 and 850. And as you would guess, the higher your score, the lower the interest rate that you can qualify for, which will save you money. If you want to qualify for the most favorable terms and the lowest rate available, you'll probably need a score of 760 or more. However, most mortgage lenders will qualify you for a loan if you have a score of at least 640 or more. Again, obviously, the higher your credit score, the better the terms that you'll get. Now, in special circumstances, if your score is lower than 640, you may qualify for a non-conventional loan, but you would expect to pay higher rates and fees for that. There's usually no immediate way to raise your score. However, if you focus on these 5 things, it can have a huge impact over time. The first one is to make all your payments on time. I mean, that's probably the most obvious to anybody. I mean, your payment history has the biggest impact on your score. The second thing is avoid applying for any new credit accounts. Your credit score is impacted by the average age of all your accounts. So bringing in a brand new one is going to skew your average age down. Step number 3 is to pay all your balances down as much as you can. How much you owe versus your limits as a ratio is part of your total score. Step number 4 is that you want to avoid closing any of your old accounts, and that goes back to the average age of your accounts. The oldest accounts that you have on there are helping you the most, so just focus on paying them down and don't close any old accounts. And then the 5th thing is to check your report for any errors. So there is a way to request to have errors removed from your accounts. Usually each credit bureau's website has an easy way to dispute errors. And if you can get any of them removed, it'll have a huge impact on your score. Step number 2 to get mortgage ready is save up for your down payment and closing costs. The most common question that buyers have, especially first-time buyers, is how much do I need to put down? Well, the answer is it depends. The most common type of loan is the FHA loan, and the requirement is that you put 3.5% of the purchase price down. So for example, $7,000 on a $200,000 home. There are other circumstances where you can put as little as 3% down or no money down. The most common type of no money down loan is available to all veterans and active duty service members. It's the Veterans Affairs Loan, or the VA loan. Apart from your down payment, at closing you'll be responsible for what everyone refers to as your closing costs. These are going to be your lender fees, your title search and title insurance fees, the attorney fees, your appraisal, the survey that you'll need to have done, lots of these little things. So you can reach out to your real estate agent or your lender to find out what's all involved and estimate what those closing costs will be based on the price range of homes that you're shopping for. In special circumstances, your lender and real estate agent together may be able to negotiate those closing costs down, have them paid for partially or in full, or may be able to help finance them through the life of your loan. So, again, just talk to your lender and your real estate agent and find out what options are available to you. Step number 3 to getting mortgage ready is to determine your buying power. Once you have the required credit score, savings for your down payment, and a list of your monthly debt obligations, you can begin to assess whether you're ready and able to purchase a home. It's important to understand how much you can reasonably afford and how much you can borrow to see if homeownership is within your reach. Your debt to income ratio is what mortgage companies will use to determine how much they're willing to lend you, and can help you gauge whether your purchasing goals are realistic given your current financial situation. Your debt to income ratio is essentially a comparison between your total monthly debt obligations, including what the new mortgage payment will be, and your before-tax monthly income. To get a sense of how much home you can afford, visit the National Association of Realtors free home affordability calculator at this website, and you can start to get a broad, very basic picture of how much home you can afford based on your current financial situation. Once you have a sense of your buying power, the next step is to meet with your real estate agent and determine what neighborhoods and types of homes that you can afford. I help people every day just like you, and I can send you a comprehensive list of homes that meets your specific needs. If there are homes available that do fall within your budget and search criteria, then congratulations, you can start shopping now. However, if there's not, you may need to save up for a larger down payment or adjust your budget or search parameters. So start laying the foundation now. It's never too soon to start preparing financially to purchase a home. These 3 steps will set you on the path towards homeownership and a secure financial future. If you're ready to buy now, but you don't have a huge down payment saved up or the perfect credit score, well, don't get discouraged, because there might be options available to you that make homeownership possible a lot sooner than you think. So if you want to find out if you're ready to buy a house, just send me a message and I'll review your options with you. I'll get you connected to a local trusted lender, and I'll help you determine the ideal time to get started with your home search.